Welcome back to another episode of the Full Subjects Podcast. Today, we are going to be doing a little bit of forecasting in the sense of what can you afford on a $150,000 household income in the Lower Mainland. So we've done lots of different episodes talking about stats, talking about different strategies for saving, even some on investing as of a couple weeks ago, and different ways that you can kind of manipulate and move your mortgage around. Today, we just wanted to go back to old-fashioned. This is what you make. This is what you can get. So thanks for joining us for another episode. As always, guys, this podcast is for informational purposes only. It does not constitute any legal, tax, investment, financial, or any other advice. It's not intended to cause or induce breach of any existing agency agreement. Nailed it. Let's get into it, Cole. Take it away.
As always, good introduction, Austin. Thank you. Yeah, so as Austin said, we're going to look at a household income. We chose 150 as a household income. We know that there's obviously households that make less, there's households that make more. And we also know that in some households, there might be only one income earner. So we chose this number because it's just going to give you guys a bit of a framework of, okay, this is the number we have. What can we afford based on this? If there's ever interest in other numbers, we can definitely talk about that stuff. But the main goal is,
I'm now just picturing our next 10 episodes just being 10 grand increments of this.
Yeah.
What can you get for 140, 160, 180? And that's just going to be all our episodes till the end of the year. Just kidding. It's not. But we kind of picked this number. You had two people working full time. In some cases, maybe you're working two jobs when you got a side hustle, all that kind of stuff. We just picked this number and we're rolling with it for an episode. So Cole, take it away.
Yeah, and honestly, the reality is $150,000 as a household income is strong in certain parts of Canada. Unfortunately, it's not as strong in the Lower Mainland, and that's just because, as we all know, housing costs are high, cost of living is high. So not to be too depressive about this, it's just the reality of it. And I think it's a good number for us to work with. So yeah, let's jump into it. So some things to consider here. Right off the bat, so 150K income. When you're looking to qualify for a mortgage, let's just kind of paint the picture here. You can use all of your income. We're not looking at after-tax income. We're looking at before-tax income when we're doing our calculations. I think that's good for people to know. Another important thing to know is the stress test. The stress test ultimately does determine how much you can qualify for. And the stress test is related to the interest rate that you're going to be paying for your mortgage. So that's just a really important thing to know when it comes to how much can you qualify for, without getting too much into the nitty gritty of it. So just some rough calculations, 150K household income, assuming you've got good credit and you're not carrying a lot of other debts, you're looking at between probably $650, $700 for a mortgage qualification. Now, this is very important because, Austin, as you know, how much you qualify for your mortgage does not mean how much you can buy for. You can buy for more than that because there's a down payment as well, right? So depending on your down payment, you're probably looking at anywhere from $700 to $850 range or beyond if you have a bigger down payment, right? So we know that we can qualify for about $650 to $700 as a loan, so as a mortgage loan, but beyond that is really up to the down payments. So yeah, that kind of gives you, Austin, a number, because when Austin and I work together, Austin says, hey, Cole, I've got some buyers. How much can they afford? They need to know how much they can afford before I can give them an idea of what they can start looking at, right? So that's where Austin and I work together closely. It's like, hey, I need their budget. Where do they stand? And then I can kind of work with them from there. So, Austin, why don't you speak to let's speak to what somebody could get maybe in that threshold. We'll talk about some other things too here, but maybe, talk a little bit more about those numbers.
Yeah. So as we kind of wrap that up and then talk about actually going shopping for a place. So right now, Cole, what you're saying is quick math, roughly, you're getting qualified for 4.5 times your income right now.
Yeah, absolutely.
For a mortgage. Yeah. Okay. So the way I'm doing that, guys, is 150. Let's say your household income is 150 grand. That's not accounting into car payments and other stuff going on, et cetera, et cetera. You times that by 4.5, you're going to get 675. And Cole said you're kind of in the 650 to 700 range. So that's how I'm doing that math. So again, if you're, for those playing along at home, that's a quick way that you can calculate that. But again, to know exactly what you're going to qualify for, that's why you talk to somebody like Cole. So what are you getting in that price point? Great question. I think for, obviously in the areas that I'm working more in, Surrey Langley, yeah, out to Abbotsford too, but let's just talk about like the Fraser Valley, Surrey Langley. I mean, if you can get in the low sevens, you could probably get into a townhouse as a first product, which would be fantastic. You're probably looking at like let's say an early 2000s build, 2 bed, maybe a 3 bed, depending on area and price points and what's going on in the strata, for like 725, 750. So again, assuming that you can qualify for 657 and you've got required down payment, if you're purchasing at the top of your budget, that's maybe something that you can be looking at getting into.
Mm-hmm.
If you're a first-time home buyer, and maybe that's not on your radar, purchasing right at the top of your budget, for that price point, you can comfortably get into, I mean, you're looking at 2-bedroom condos in the 550 to 600 neighborhood, like 2 bed, 2 bath, 800 to 900, maybe 1,000 square feet in an older building, yeah, in that price point comfortably. And that, again, that's in like Willoughby, Langley area. If you head into Langley City, you're going to be able to get a little bit more, just because maybe that price point isn't as much. Walnut Grove, I'd say, is pretty comparable to Willoughby when we look at price wise. And then different pockets of Surrey, you're probably looking at the same kind of thing. Maybe I'd say Cloverdale and Clayton is pretty comparable price point wise to Willoughby. But if you're heading into like let's say a Guildford area or like a Fleetwood area, there's probably some pockets where your buck might go a little bit farther. And again, lots of different variables go into that finishing level of the complex, age of the complex, how well run the strata is, what repairs are coming up in the building. Like, an older building that's had its roof, decks, plumbing, windows, all that stuff redone is a great product. Just because it's older doesn't necessarily mean it isn't a good product when all of that stuff has been done. And that's going to be a lot different if all of those items are going to be coming up in the next couple of years when you're going to be footing the bill for it. So just something to chew on there.
Yeah, no, I think that's good. I think it gives people some options about different areas, what you can get in those different areas. We've had an episode before where we talked about, is it worth moving further out to get more? Like we have an episode on that. So, and I think that episode plays to this one a little bit too. It's like, hey, my dollar can go further here, but then there's trade-offs with transportation if I don't work from home. Like there's all these other things you have to consider. Now, I know that Austin's gonna he's gonna bring these things up to you when you're trying to make a decision about, hey, where do I want to live? If you're just really truly trying to figure out what area you want to live, and then also, okay, does where I want to live, is it dictated by what I can afford? And as part of that, it's not just, hey, I can afford this here or I can afford more here. It's like, okay, well, what are these other factors that I have to consider if I do move here versus if I move here? And that's all part of the discussion that Austin's going to have with you. It's not just simply a, hey, this is what you can afford. Here's your options. Let me know what you want to see. Sign here when you want to write a contract. Like there's a lot more to the relationship than just dotting I's and crossing T's. So that's the kind of thing that you can expect when you're working with somebody like that. But I think it's really important to note that not everybody will necessarily give you that service. So definitely make sure you're getting the service that you feel like you deserve.
Yeah, I think it's a great point. And one thing I'll add in that's also part of that conversation. It's really important to think like, how long are you going to be in that place? If it's just you're getting out of renting, you're getting into something, maybe you don't need 2 beds, 3 baths, and 1,500 square feet. If it's just going to be you, maybe you just need space where you can set up and you get into a place, maybe you're not at the top of your budget, so you feel a little bit more comfortable with your monthly cash flow and your situation. Maybe you're throwing some extra money at your mortgage, maybe you're investing that so it works a little bit harder for you. Maybe you're just good old fashioned throwing that into savings for a rainy day or for when you maybe you want to make your next purchase and upsize from there. So there's lots of different strategies. I know something that Cole is great with working with people on, is say, okay, like let's look at your setup. Let's look at how this is all going to work and kind of factor into that plan. So lots of different ways to do it. We don't want to go into like, necessarily everybody's individual financial and investment strategies and monthly situation, all that kind of stuff. But lots of questions go into it. It's not as simple as like, oh, let's go buy a place and just see what you like. I'm hoping people are putting more time, effort, energy, and strategy into the stuff that they're showing their clients. So yeah, let's get on to the next part of that, which is probably going to be, okay, this is what you qualify for the mortgage. Let's talk about down payment amounts and what's required.
Yeah, let's do
So
that.
that's going to be a percentage based off of your purchase price, but Cole's going to be better to explain this one.
Yeah, absolutely. Austin's got a very good understanding of this too, actually. So I'm not gonna take all the credit for this. But yeah, let's talk about down payment options, because as we said, mortgage qualification is one thing. Austin gave us a rundown of what we can afford based on how much we're qualified for plus our down payment. But let's talk about that down payment. So if you're buying something that's up to $500,000, which you're more than qualified for in this case, you only have to put 5% down, but you are going to pay for mortgage insurance. So that's a premium on top of the mortgage. Now, if you're beyond that $500K mark, and now they've actually pushed that limit up to $1.5 million, you can still get mortgage insurance. You still need 5% on that first $500,000, so that's $25,000, and then you need 10% on every dollar beyond that. So let's say you're buying for $750, so that's a good number based on the numbers we're using. You're going to need that $25,000 for the first $500K, and then you're going to need that extra amount beyond that, which is another $25,000 for the extra $250K. So you can put $50K down realistically on a $750K purchase, which means you have a $700,000 mortgage plus the insurance. So that's probably going to be another 10 to 20 grand, just rough numbers there. So now you're carrying about a $720,000 mortgage, and you put $50,000 down. And now that's assuming you can qualify for that amount, right? So, and then last but not least, if you're buying something over 1.5 million, it's going to be 20% down, minimum. And there's some other kind of smaller rules that fall into this, but I don't want to get too specific on that. So we'll just kind of leave it at that. Yeah, so that's down payment, but I mean, those are rules. Let's talk about how are we actually going to save a down payment, right?
Mm-hmm.
Let's talk about some different first-time homebuyer options, as well as some just general ideas. So Austin, I'm going to talk about the first-time homebuyer stuff here, and then I want you to speak to maybe so how do we actually start saving this down payment? And this is not going to be financial advice. It's just going to be very basic. Like, let's break down some simple numbers here, and let's look at how this could actually possibly work.
Yeah. And it's funny you say that, because obviously one of the biggest challenge, especially in the lower mainland, is actually saving up the lump sum that you can then, use as a down payment. Often what we'll see is sometimes maybe the down payment is a portion of like a gift fund from bank of mom and dad. So maybe like, they feel confident and comfortable paying the mortgage, but actually like saving up the amount for the lump sum of like savings as the down payment is the challenging. And you'll sometimes see parents with gift money, or that's kind of like the help to get into the market. But yeah, let's talk about some of the different accounts and different things that you can use. And I think I kind of just previewed number one by talking about gift money, but
you kind of segued nicely there. So gifted down payment. Sorry, Austin, is as you said, that's one option for sure. There's one important thing about this. It needs to be immediate family. It's very difficult to use a gift if it's not from immediate family. Let's just leave it at that, but it needs to come from immediate family to make this a seamless process. Beyond that, there's two really big things, two main things that you can use. So there's the first home savings account, which is fairly new, and you can put up to $8,000 in that per year. And then there's this one's actually a little bit better because it's usually money that you've already saved. So your RRSP, they have what's called the home buyers plan. They've recently increased that limit to, I believe it's 35,000. If not, it actually might even be higher. And you can utilize this for two people. So assuming a household income, we've got two people here, you could realistically withdraw up to 70,000, penalty free. So there's no tax on that amount, but you do have to pay that amount back. So it's not something that you're getting tax free. You do eventually have to pay that money back to the RRSP in order to take advantage of that benefit. So if I was ranking things, first home savings account is a better option than the home buyers plan, but a lot of people already have RRSPs, so they'll pull out of that. Oh, hey, I'll just use some of both. Tax-free savings account, that's been around for a really long time, but that's a really good place to just save money in general because it's tax-free. So definitely take advantage of that as best you can. But yeah, those are just a few things. So Austin, why don't we get into some numbers here and kind of talk about just some ways to some basic strategies to save and actually what it would take to get to a point where you have a down payment.
Yeah. So going off of your other math from before, again, like minimum getting into a place for 500K, minimum down payment is going to be 25 grand because it's going to be 5% of that. And then there's the 10% portion. Again, you've went into all the details. Let's talk about some of the strategies. If you're making 150 grand as a household, again, that's generous. This assumes probably in most cases that there's two people, which is going to, you divide that by 12. You're looking at what, 9-10 grand per month after taxes.
Yeah, for sure.
And the average cost of living for a couple in BC is probably going to be in that 6 to 7 grand a month. You start to add up foods, obviously living expenses, your rent, if you're renting somewhere, is probably going to be in the 18 to 24 or 26 range, depending on, again, what you're renting, all that kind of stuff, food, all that kind of stuff. So, quick math, 9 to 10 grand minus 6 to 7, you're probably going to be looking at let's say 3 grand per month beyond basic living costs. Is that fair to say?
Yeah, and that's perfect, Austin. And what's important about that number is, number one, the living cost is a general thing. It's like an average, right? And then number two, that's assuming you're not spending money on much else. Like you're not spending money on a lot of entertainment. Like you're very limited in what you're spending money on beyond your living costs. So yeah, you have that extra 3 grand, but how much of that 3 grand realistically is going to be available to save? And then Austin, I'll let you continue because I know we've got some more notes here that we want to touch on.
Yeah. So, roughly of that 3 grand, it would take probably around $2,100 for a full year to have the minimum down payment for a 500K place. A moderate interest rate will help that happen maybe a bit quicker. And then again, if you're looking to get into a 750 grand place, so let's say you decide, hey, I want to get everything that I can possibly get with my first purchase, you're probably looking at around 50K down payment, or that would be about 2 years of saving 2 grand a month. And again, quick math on that, your 25 grand minimum will be on the portion from 0 to 500K, 10% of the difference between 500K and 750. So again, that's 250 grand, 10% of that. Yep. 25 grand. So that's where the 50 grand number comes from.
Yeah.
And then, let's talk about some saving strategies from there as well.
Sure. Yeah, for sure. And I mean, Austin touched on it a little bit, like as long as you're investing this money you're saving, sorry, I'm going to just touch on this quickly, Austin. You're going to get some interest, like you're not going to get massive returns, but it will help. So yeah, like it's not to say that you have to be exact, but if you have a pretty steady goal of, say, maybe it's not $2,000 a month, maybe it's $500 a week instead. Maybe that number works better for you. Like that's a lot of money for some people for sure. But I mean, if you're like, hey, I really want to save that amount in 2 years, that's kind of the approach you have to take. It's like, I got to put this money aside every week or every 2 weeks. It's $1,000, whatever. But yeah, so let's talk about some strategies. First and foremost, if your goal is to save, then you have to set that as your number one priority. Save first and then use those extra funds as you wish. As we talked about, let's say you've got an extra $3,000 beyond your basic living expenses, and you need to save $2,000 from that every month. That's 2/3 of that. So that leaves you with $1,000 basically a month for discretionary spending, which is not very much, to be honest with you. So it's going to take some sacrifice if you want to be very aggressive about your savings, and it's going to take some missing out on things, which again is sacrifice. You're not going to be able to buy the things that maybe you want to buy right now. And then once you can get into a place and get established, incomes typically increase year over year. So maybe get a raise, things will slowly get easier. But that's not to say that this is going to be easy. It's not easy to save that kind of money. Yeah, I don't know, Austin, what else do you think might be some good ideas here?
Yeah, I mean, I think the biggest thing that comes to mind with this is have a plan, have a budget. It sounds so cliche, but it's very, if you do, what does not get measured does not get tracked, right? So if you're just going through the motions of doing stuff and like, oh, I'll just stop for a coffee here, and oh, I'm just going to grab this quick breakfast here. Like, have a budget, have a plan. There's tons of resources that you can use to help be effective and efficient in that. Use AI, use Chat GPT, help, all of that stuff can be, great for budgeting. My biggest advice for people personally, and this is something I use, like, just review your expenses, like review what you're actually spending money on. It will stun you. And you'll realize maybe how much money you're spending on stuff that isn't necessary. That's a big one. And then the other thing too, maybe as part of this, maybe you're looking at getting an extra part-time gig, maybe once or twice a week, whether that's, or, maybe you're picking up one OT shift a month at work just to help with that. Or maybe you're starting a side business where you're doing, cleaning or like, personal training or like, a serving position or, Uber Eat or whatever, right? Like, there's different levers that you can pull. Like, there's two ways that you can look at it. You can look at like trying to save 10 grand or make an extra 10 grand a year or something like that. Right. So different levers that you can pull, and maybe it's a combo of both that's going to help you into your, get you into your first place. But again, have a plan, have a strategy. And if it's important to you, find ways to make it work. And sometimes just, it's as simple as, like Cole said, like, just say no. Hey, I'd love to come to that birthday that's going to be out at this pub, but I don't want to go spend $200 or $300 in a night on dinner and drinks and Ubers and this and that, right? So just be mindful of what your big picture goal is, and just plan around that.
Yeah, no, it's really well said, Austin. There's one thing I want to touch on with what you said, and then there's a couple points that I want to make here. It's what you said about you can either save more or you can make more. And we're obviously assuming you have 150K of, let's say, salaried income or steady income that you're guaranteed. But yeah, maybe you have a certain lifestyle that you want to live, and in order to save money, you have to make that extra money. So maybe you got to sacrifice some more time in order to make that money. That's one approach, and that works for a lot of people. It's obviously based on your circumstances. If you have kids, maybe that's not as possible. Like, there's different factors that go into that, but it's not necessarily a, hey, I can't spend any money. Maybe it's a, hey, if I make some more money, then I have a little bit more money to spend. And there's give and takes to that. So I think that's a really good point, Austin. Two things I wanted to touch on as well is watch for things like subscriptions. Like, the companies do this on purpose. They sign you up for a subscription. Maybe it's a free trial for a month. They always take your credit card info. Before you know it, you've paid for it for 3 months or accidentally paid for the annual subscription. And you're like, oh crap, now I'm out X amount of dollars. Like, those things add up. And unfortunately, we live in a world where everything is you subscribe to now. Every streaming platform, like Netflix, not to say these are bad things, but like Disney, Apple, like every single one is a monthly payment, right? And these things add up, and maybe ask yourself, do I need all of these things? Are these things that I can sacrifice for a little bit? So things like that can be a killer. And then the last thing I wanted to touch on was, for some people, a really good strategy is only spend discretionary money if you have it available to you. So is it a debit card or is it cash? Credit cards are very easy to spend money on because they typically have a limit, and you're not probably hitting that limit, but ultimately you can just tap and go. Like, it's not, and then you don't realize what you spent until you pay your credit card, or you don't even realize it because you just pay your credit card and then that money's gone, right? So for some people, it's physically cash. It's like, hey, let's say $100 to spend this month how I want. Not this month. Let's say this week. Literally take out $100. Once that money's gone, okay, I've spent it. Next week I get another $100. You know what I mean? I know that can be kind of limiting and it can feel a little bit restricted, but if your goal is to be aggressive and to save money and to get to where you want to be at a relatively quick pace, because saving 50 grand, Austin, let's be honest, in 2 years, that's quick. Like, that's not easy to do. But what we're saying is it's not impossible, and there is things that you can do to make that work if that's what you'd like to do. So yeah, I think that's all I have for the savings part. If you want to touch on anything else, Austin, let me know real quick. If not, we're going to jump.
Yeah. Only other thing I'd maybe add to that too is, like, don't be, and maybe this is easier said than done. But like, don't be afraid to maybe ask your parents for help, even if that's a couple grand, makes a huge difference. What we would say as well, And again, this is referencing another episode. It's not like, well, I've got 25 grand, I get to go buy a house. Like, that's not necessarily how it works. There's
No.
going to be other things like closing costs, property transfer tax. Like, it's not as simple as like, well, I've hit my 25K, I get to go buy a place. Like, if only it was that easy. There's other costs that obviously go along with it. But if you want to know exactly what it's going to take or how that all works, again, reach out to us. Either of us would be happy to sit down with you on a call or a coffee and kind of walk through all of those different costs. We can't obviously go into every situation on a half-hour episode, but just know there's more to it, and we'll leave it at that.
Yes, exactly. We don't want to have secrets or surprises when you eventually go, hey, I thought my costs were this and now they're this.
Yeah,
And
this is why there's a disclaimer at the beginning of the episode, folks.
Yeah, exactly. But let's keep going with costs because we haven't actually talked about monthly cost yet. Let's get into kind of what we would expect monthly costs to be based on the scenario that we were talking about. The number we've used is obviously 150K of income, but from a purchasing standpoint, let's use the 750K purchase price with the 50K down. Now, like I said, it's going to leave you with a $700 to $1,000 mortgage. Plus, there's going to be the mortgage premium on that. Sorry, the mortgage insurance premium on that. So it is more than 700. But just as a rough number, guys, looking at like say 5-year rates, even 3-year rates are very similar right now. Your payments are going to be somewhere between $3,400 and $3,800. It's going to depend on obviously whatever the rate is. It's going to depend on how long you amortize that mortgage. So is it 25 years or is it 30 years? Which for first-time home buyers, you have the option as with an insured mortgage. And then, yeah, that's kind of it. And I think Austin gave a really good number earlier on in the episode. He said about 4.5 times your income is what you can qualify for. So I'm going to give you guys another pretty easy number to roll with here. It's about $500 per $100,000 borrowed. That fits right into our range here. So 700K mortgage, $3,500. It's probably going to be a little bit over that, but that just gives you kind of a rough number of like, okay, it's going to cost me about $500 for every 100K I borrow. That makes it really easy for people to figure out how much is my mortgage going to cost. And then Austin, why don't we talk about some other monthly costs here that you got to factor into this as well?
Yeah. So first things that come to mind are going to be like, based on that price point, unless you're moving like real far out, or maybe if you're listening from somewhere other than the lower mainland, you're probably going to have to consider strata fees. That's going to be 30 to 50 cents a square foot plus, depending on amenities, depending on what's going on for, the type of strata that you're in and the age and all that kind of stuff. Property taxes come to mind. Sometimes that gets lumped in with your mortgage payment. Some lenders will do that. Sometimes they won't. Maybe that's a separate cost. Again, something to be mindful of, because again, that could be a couple $100 a month at the minimum. That's obviously going to be a good or a big chunk of your monthly expense or monthly cash flow or monthly it's going to be the biggest percentage of like what goes into your account, what comes out. Other things that I could think of as part of that as well is going to be your utilities, gas, water, electricity. Do you want cable? Do you want internet? There's going to be other things that you probably need as well, phone bills, et cetera, et cetera. So again, it goes back to what we said maybe a couple minutes ago. Use an Excel sheet. There's going to be, again, a ton of stuff out there. Look at, budget all of this stuff. Hey, if this is what we get a month, this is what our mortgage is going to be. This is what our strata's fee is going to be. This is what our property taxes will be. These are all of those other expenses of things that we have, subscriptions, et cetera, et cetera. Maybe there's car payment, car insurance. Like, go through a list of like everything that goes in and out of your account, put that into a spreadsheet, put that into an Excel, and then see what's going to make the most sense. Because again, maybe you qualify for 750. Maybe realistically, based off of what you have going on, maybe you only want to spend 600K. That can change, but that's why we're calling this segment the monthly payment reality check.
Yeah. And honestly, I think this is arguably the most important part, because most people don't look at the overall, like the annual cost. They don't look at the overall cost of what they're buying. They want to know, okay, how much is this going to cost me month to month? Or let's say every 2 weeks, because some people do bi-weekly payments. Like, how much money do I need to give up in order to make this work? And as Austin said, there's strata fees, there's property taxes, there's insurance, and then there's other things beyond that too. Like there's your utilities, like Austin said. So yeah, this whole number is going to be a number that you're required to pay. Like you can't not pay your utilities. You can't not pay your strata fees. Like these are things you have to pay. Whereas like cable, Austin gave as an example, you don't have to necessarily go for cable. Like that can be an option for you. But at baseline, you're going to be looking at, let's say the mortgage payment's 34 to 38. If we're just talking strata fees, property taxes, even if we lump insurance into that, we're still probably $4,000 to $4,500 a month. And that's
Easy.
just for those things. Utilities flex a little bit, obviously, depending on how much you're using, and depending on what you bought. Like as Austin said, if you buy a bigger place, it's gonna cost you more to heat it. It's gonna cost you more to pay for the electricity. Like those things are going to go up slightly depending on what you buy. But I think that number, the monthly payment to reality check, is a great way to phrase this, because that's the number you have to look at and go, okay, I can deal with that number. And how does it relate to what you're paying now? Right? Because Austin said, like, maybe you're paying this amount in rent. You're probably going to end up paying more now on this than you were paying in rent plus your utilities if you're paying your utilities. But you have your own place now too. So there's some trade-offs, but it's definitely the number that I would say that is most important to most clients. Yeah.
Yep. Very, very well put. We've kind of already touched on the next segment, so we'll just do a quick recap here. So,
Yeah.
Based off of your budget, here's what it actually gets you in the lower mainland. You're probably, in the sevens, probably looking at entry-level townhouse or maybe like a larger condo, again, assuming that you're purchasing in that number. If you're looking at Burnaby or New West, that's probably getting you just into like a condo, probably like a concrete build. Abbotsford, Maple Ridge, you're probably looking at a larger townhome. In some areas, you may, like Maple Ridge, you could probably get into like an entry level detached at that price point. Might be something that's a bit of a project, or depending on how far you go into Maple Ridge, but that might be something that you're willing to do. But in Abbotsford, that price point is probably getting you like a, definitely 3-bedroom condo. 3-bedroom townhouse. Could you maybe get into something with like a 4-bedroom and like a side-by-side garage, like a bigger than 1,600 square foot one? Maybe. Might be a little bit tight at that 700 number. But yeah. And that's why being flexible on location is key, because again, we've referenced this on another episode. There's the trifecta of criteria, area, and budget. A lot of times you have to pick two of the three, and one of them has to be you might have to compromise on. So
yeah, no, 100% Austin. That's the biggest thing, is location is going to really depend on your budget, and you have to have realistic expectations about what you can afford. So to close out here, 150K income is a very good household income. Like I think that's one point I really want to make sure we get across, is like, we're not saying that that's the average income by any means either of a household, because I know that's well beyond that. But I do know that that's a number that some people are definitely sitting in that bracket right now. And they are first time home buyers. I think this gives them kind of an idea of what it would take for them to get into a place, assuming they have no savings, no help from a gift from parents or an immediate family member. And then what would that actually look like in terms of costs? Because that's the biggest one. How much does it cost me on a monthly basis? Yeah, I think that's pretty much it.
Yeah.
Anything else you want to touch on?
Yeah, one thing we'll just kind of finish off with is it's not just necessarily about qualifying on paper. It's about making sure that you're comfortable with the monthly payments, situation makes sense, and there's some lifestyle trade-offs that you have to make, and it's just about making your plan and executing it makes the most sense for you. So thanks for tuning in, and we will see you next week.